afternoon and happy Wednesday. Welcome to Stock Market Today. Ali Corman, Justin Nielsen here with a look at what happened in today's session. And Fed news hit the market today, Justin, and the Nasdaq finished the day with a gain of 1%. So strong action today. We will get into the technicals and highlight three stocks that are on our radar.
Yeah, we'll kind of run the gambit of a number of different sectors. Of course, energy and financials were very strong today. So we'll take a look at Continental Resources in the energy sector and also Morgan Stanley in the financial sector. And then we'll just go ahead and round it out with a retail favorite, Lululemon.
Okay, we will do that. First, let's check in on the major indexes. Here's a look at the Nasdaq Composite, as I mentioned, finishing the day up 1% at 14,896.85. And the 50-day line, Justin, is right around 14,880. So closing the day above the 50-day line, although a bit off of its intraday high.
Yeah, so it did come off its intraday high, but I think the big news here is that the Nasdaq was able to get back above its 50-day line. So we were kind of looking at this, is this going to be the correction that finally takes hold, maybe something a little bit more serious, something that's getting over 5%, closer to 10%, or is it going to go back to our old buy on the dips mentality? And right now, it's looking like the buy on the dips thesis is the one that's winning out. So, that doesn't mean that we're necessarily smooth sailing from here, but right now, if I think it's starting to show its hand one way. That can always change because, look, last week I was thinking that we were getting a reversal off the 21-day line. Didn't happen, so you have to react accordingly. So that's why it's important to, have your thesis, but also have your lines in the sand of like, oh, you know what? Things aren't working out the way I thought. This is where I'm going to have to exit.
Right. Investors, it's hard to be perfect. So you wouldn't have been wrong to try to play that bounce. You also wouldn't have been wrong to start selling when we slice below the 50-day, but it's just a constant adjusting and managing that risk.
Right. And again, this is why, look, we're not trying to prognosticate as to where we think the market is going to be in 1 week, 2 weeks, 3 months, 6 months. We're just kind of taking it day by day. And there certainly have been a lot of headlines. You have the China property, potential failure happening. I mean, there was kind of some good news coming out on that they were going to make a payment. So that started the rally. And I think the Fed meeting, for as much as it was maybe a surprise that they went from 7 to 9 of the committee members thinking that a rate hike could be happening in 2022. I mean, that's half the members, 9 out of 18. So that's starting to get up there in terms of, hey, this might actually be happening in 2022. But the fact that the taper didn't happen, I think there's a lot of this that's been projected and signaled. So, I heard on CNBC someone say that this has got to be one of the most discounted things that happens when it does eventually happen. So I think Powell's done a good job in that regard with showing his hand quite a bit. And, the fact is he's dealing with kind of an oxymoron right now. You've got this higher unemployment than they'd like, and you also have a tight labor market. That doesn't normally make sense, but of course you got this Delta variant that's throwing things into the mix, and it makes sense. The way that they're approaching this cautiously. He also really did seem like he was trying to decouple that whole taper talk from the interest rate liftoff, and hey, taper's happening first, and I think that kind of gives people a sense of knowing what to expect. And so while we did close off the highs, it really seemed like the market took all of the Fed information in stride very easily.
And getting back above that 50-day line,
right,
a key milestone, but we'll have to see if the Nasdaq can hold above that level. And, Justin, the S&P and Dow also notched gains of about 1% today. The S&P still not back above its 50-day line and just shy of that 4,400 mark.
Well, and the S&P 500, look, on Friday of last week was showing a little bit of weaker action when it undercut the lows, the recent lows there, and got back below its 50-day moving average line. Not by much, but it was showing a little bit weaker action than the Nasdaq Composite. Now you also have the IWM, which is our iShares representation of the Russell 2000, so more in the small cap territory. That got back above 50-day moving average line. But as you can see from that relative strength line, this has really been the lagging index for a while. However, I think the fact that this is showing the strength that it did today, it was one of the leading indexes, kind of gives you a sense that there's more of that risk on mentality, getting comfortable with that. But two indexes that we should also take a look at just to kind of get a sense of what was happening in the growth field. FFTY, which is the Innovator IBD 50 Fund. This is what we use as our proxy of growth. That's getting to recent new highs. The relative strength line improving a lot with that. That was up 2.2% today. So that was looking pretty strong. And BOUT, which is the breakout stocks index. Again, this is kind of a look at growth. That was also looking very strong today. The FFTY, has started to get a little bit more populated with some of these high flying IPOs, and that has led to some extra volatility, as you saw a week ago when it had a pretty significant drop, and earlier this week that gap down. But it seems like it's recovering and showing a lot of strength.
It is. And now let's take a look underneath the surface, starting off with CLR, Continental Resources, an exploration and production name in the oil and gas sector, up 3.7% today. So a notable mover in oil and gas.
Yeah. So, XLE is, again, what we often use as our proxy of energy. But if you wanted to look a little bit more specifically at the explorers and producers, we can use the XOP ETF. That's been showing strength back above the 50-day moving average line. But you look at CLR, and by contrast, that is looking much stronger. It's already gotten a breakout into new high territory. And look at this pullback. This pullback that happened, it came down to the 10-day moving average line and got support right there, which also coincided to that line you just drew beautifully, the line right there at 40.41. So the fact that you were getting support at those two levels, I'm not one to typically buy off the 10-day moving average line. I like to usually see a little bit more of a pullback, but it's hard to argue against this relative strength. I didn't buy it myself, but I'm kind of kicking myself. The truth is, I've been talking about this for a little while, and in the U.S. Explorer and producers, it seemed like if you have resources, in your name, that you've been doing pretty good. Because Antero Resources, ticker symbol AR, has been another one that one broke out of a double bottom very early on and hit the 20% profit level. While a lot of these other stocks in the group were still trying to get back above their 50-day moving average lines. You also have Range Resources, RRC. So, again, there's a lot of these stocks that have been looking very strong. And as we talked about at the outset, XLE, the energy sector, spider sector ETF, was the strongest sector by far today. So that was certainly where a lot of the strength was. It's a little bit harder to play commodities sometimes, but again, if you're just looking at where the strength is, this was showing a lot of strength today.
Right. Action that you can't ignore. And even though the exploration and production group isn't ranked number one, it is still ranked in the low 20 range. So we want to be focusing on those strong groups. So pointing out that action is very important. And you mentioned financials as well, Justin. So Morgan Stanley getting back above its 50-day line with a gain of 2.5% today.
Yeah, so I'm going to kind of tell a tale of two cities here. On the one hand, the fact that this has gotten back above its 50-day moving average line, I think is great. A lot of the financials were showing a lot of strength today. Of course, anything that kind of gives you a sense that the 10-year Treasury is going to be moving up, which again, as the taper comes in, what's going to happen is all of that. Let's think about it. $120 billion a month that's going into assets. 80 billion of that is into treasuries. So, you remove that, and that is most likely going to have some pressure on the bond prices. The bond prices move inverse to the yield. So if there's selling in the bonds or not as much buying, then you're going to expect that yield to rise. And, that's what, people are expecting. That should be good for financials. Now, Morgan Stanley, the one thing I will say that kind of makes me a little nervous about this one is there was some pretty heavy volume on the downside before you had today's action. So I would have liked to see some more volume today. there's a couple caveats here. That biggest volume, well, that was quadruple witching. Okay, so maybe we can forgive that. But then Monday's volume was also very, very heavy. And today, okay, you can kind of say a lot of people were waiting for the Fed announcement. So the volume was really kind of low before that happened. But still, it's one of those things where the volume is concerning to me. But you compare it to its group mate, Goldman Sachs. Goldman Sachs, I was actually wondering, hey, if this thing gets to its 50-day moving average line and reverses, I was considering this as a potential short, at a certain point. So again, I think the jury is still out on some of these as to whether or not short term, whether they can kind of hold these gains, but they certainly did improve today. And I think Morgan Stanley still looks to be like one of the stronger ones.
So if it can follow up on this action tomorrow and have some volume behind it, you think it would be appropriate to add to one's portfolio?
Yeah, I don't hate the idea at all. The fact that it got that support right around the 50-day moving average line, the fact that this is one of the groups that's showing strength, and you can see just looking at that relative strength line, if you can kind of imagine what would this relative strength line, if if Morgan Stanley popped to new highs, well, you'd probably see that relative strength line popping to new highs, and that's a good sign just by itself.
Mm-hmm. Always good to focus on stocks that are showing that relative outperformance. And what about Lululemon, LULU? Its relative strength line saw a big move after that earnings pop, with shares surging over 10% that day. And it really has held up exceptionally well in the recent downdraft.
Yeah, and that's what I kind of wanted to point out here. The fact that it did hold that earnings gap so well. And, while this downdraft was happening, I mean, here again, this barely tested its 10-day moving average line and, really stayed above its 21-day moving average line. As you mentioned, the relative strength line is looking very strong on this one. Retail has been one of those areas that just keeps on showing strength. Some of the names that, we were looking at before were showing a little bit of weakness, but again, this is holding up very well, near highs, really didn't give up much ground. And those are the stocks that are kind of refusing to give up gains. Those are the ones that tend to get the most of our attention because they have that future potential.
Right. Okay. So how do you trade this one?
Well, I think that right now I think right now it's setting up fairly nicely. And while this isn't your typical base, you can kind of call it a shelf-like structure, but you can go straight across from that 434.22. You could try and get cute and do a downtrend, but really, that's not going to give you much of an edge here. It's a $430 stock. So if you get in a point early, it's not going to be that big a deal. But more than anything, that volume really came in heavy on that earnings report. And you look at, the most recent action, and really the volume has come in more on the plus side. Even going before that earnings report, you can see a lot of those spikes really were gravitating towards the plus side. So that's one of the things that I think I like the most about it. It may have been hard for you to play that earnings gap. It wasn't necessarily in the best position, but now that it's paused and held up so well, I think that could be providing another opportunity.
All right. Well, with a seemingly significant day in the market today, especially for the Nasdaq, Justin, what should investors be doing to prepare tonight for the action tomorrow, and how they should approach adding exposure or waiting in the first little bit of trade? What should they be doing?
Well, as we've been saying over and over again, this doesn't have to be an all or nothing proposition. You don't have to be selling everything on Monday as we get below the 50-day moving average line and then buying everything today as it gets back above. So, we kind of have been taking a measured approach. And look, I was starting to get a little bit more concerned, that we were spending some days below the 50-day moving average line. It's one thing to test that 50-day moving average line over and over, but the more you test it, the more you got to figure you're getting closer to that end point. So I think you just have to, stay flexible. And if your stocks are working, then guess what? You can add more exposure. You can take some profits into the strength, but be adding other ideas. This is why it's so important to keep your watch list fresh. If your ideas aren't working, well, take a look. What is it that you're in? Is there something that you're missing? Do your homework, look at where the strength is, and try and find those setups. But more than anything, especially when you see a strong day like today, don't buy extended.
Wise words to end on, Justin. Thank you for that. And thank you all for tuning in. And the charts that we use, of course, are our MarketSmith charts. And if you missed Free Access Week last week, you can check it out by going to investors.com/MS4 weeks, the number 4 there. And we hope you check that out. Thanks so much, Justin, and everyone for tuning in. We'll see you right here tomorrow morning on IBD Live, investors.com/IBD Live for all the latest news and analysis you need to know. Thanks, everyone.